This ETF has tripled the performance of the NASDAQ 100, but it's also one of the riskiest funds out there. Welcome back to my series, ETF Spotlight, where I break down ETFs that you guys are interested in. And in this episode, let's break down TQQQ. So TQQQ stands for ProShares Ultra Pro Triple Q. It's designed to deliver 3 times the daily return of the NASDAQ 100, the same index that funds the likes of Triple Q and Triple QM. So if the NASDAQ 100 goes up 1% in a day, TQQQ aims to go up 3%. But on the other hand, if the NASDAQ drops 1%, TQQQ might be dropping 3% as well. So how it works. TQQQ uses financial instruments. They're called derivatives and swaps to achieve a 3x leverage. It is reset every single day, so it is really built for short to medium term trading and not really for the long-term holders. Although there are some investors that still hold it long term and just accept the volatility for potential bigger gains. So when the tech sector is booming, TQQQ can absolutely deliver some insane returns. From 2010 to 2021, it has delivered a 7,000% return compared to around the 500% for the NASDAQ 100. But during downturns, like in 2022, it can crash very fast, losing over 70% that year. So it's definitely not for the faint of heart. You can definitely get some upside from tech's exposure growth, but also 3x the pain when things go south. So for this one, the expense ratio is around 0.85%, which is very high compared to the regular ETF, but it's what's expected for a leveraged fund like TQQQ. The dividend yield is minimal, but I still have to mention it. It's sitting around 0.28% over the last 12 months. But this is a fund that's not about paying out dividends. It's about capital growth or losses. TQQQ is for investors who understand volatility and want to use that strategically. So it might be for short-term traders, swing positions, or even like a small satellite portion in a heavy growth portfolio. And it's definitely not something to put your emergency fund in, but in the right hands, it can amplify returns when the market is trending up. I personally see QQQ as a high risk, high reward growth play. I don't hold a position in TQQQ for the moment, but it is something that I have been looking at for a while. But I do like understanding it because it shows how leverage can boost or destroy returns. And it's a good reminder that investing is about managing risk. If you want to see the rest of the ETFs that I'm investing in, I did a full breakdown on my channel in a long form video. So go check that out. And as always, good luck in your wealth building journey.